Good morning, traders. It's the 26th of July. We're Signal Centre talking bull. I hope everybody's doing well. We are good to go. How's everybody doing this morning? Steve, you're on mute. All right, I muted you.
There we go.
Very well. I was going very well until I was on mute.
Yeah, sorry.
How are you?
These
All
things
right?
happen.
Yeah, not too bad, thank you. Okay, let's get stuck into the latest headlines then, shall we? And rattle through those, then we can take a look at the charts and what's happening for the day ahead. So let's start here. With the German business confidence number, which slid yesterday. The IFO business confidence index retreated to 88.6 for July from a revised 92.2 previously, which was lower than the consensus forecast of 90.2. We've seen the German gas supplies cut. Gazprom announced that there would be a net reduction in supplies to around 20% of capacity from 25% since last week's restart. Supplies at this level would make it extremely difficult for Germany to build up sufficient supplies to meet demand during winter, with expectations that emergency programs will be put in place to to curb demand. The euro has been pretty resilient despite the gas fears. We saw it dip lower after the German IFO data, but there were important reservations over gas supplies. The euro, however, was broadly resilient, and euro USD managed to trade above the 1.02 level on Tuesday as lower yields limited dollar support. UK manufacturing struggles. The UK CBI Industrial Orders Index declined to 8 for July from a previous reading of 18, which is below the consensus forecast of 13. Output increased at a slower rate in the quarter, and business confidence deteriorated again, while there was slight easing of cost pressures and investment intentions were slightly stronger. In terms of inflation, we've got the latest of the largest economies out very shortly. We've got Australian inflation data due. The second quarter Australian CPI data will be released at 2:30 a.m. tomorrow UK time AM. And expectations are that prices will increase 1.9% after a 2.1% increase in the previous quarter. The underlying prices are forecast to increase 1.5% from 1.4% previously, and the data will no doubt be important for the Reserve Bank's policy expectations. So that's that for the latest headlines. Not a whole lot actually compared to usual. So let's get stuck into some charts and have a look at how price is setting up for the day ahead. Steve, do you want to kick us off?
Yeah, I'll kick you off with Bitcoin. Taking a look at this. Yesterday we saw prices break down from the overall trend higher. We've got this look at the daily chart to get a bit of an idea on this. We've seen out of the last 6 days, we've seen 5 negative days, and we're looking at a 6th negative day today, already on the back foot. We've got this corrective channel. It's looking a little bit like the sort of, we're repeating the pattern we saw from around May to June, and where we saw that got this corrective channel, prices moved above the 21-day moving average for a short period and then reversed quite aggressively. We're seeing the same sort of thing here. Really need to see prices probably break the 21,000 cleanly, and a break below 20,000 should accelerate this this downward move on Bitcoin. I'm still pretty negative on that overall. Short-term chart has broken below, the 4-hour chart has broken below the Ichimoku cloud, so that's a short-term trend is negative. We could even add a potentially a channel here if I can see it. Channel breaking down there. So yeah, on the back foot, cryptocurrencies. Commodities, gold also reacted negatively yesterday. Here's the daily chart. We can see this attempt to recover from the, we touched the support area that we highlighted on the chart quite a while ago. We highlighted it, and a nice bullish outside candle led to a reaction higher, although yesterday's negative price action not so good for the lovely shiny yellow metal that we're also intrigued by. $1,740 now becomes a resistance, and we've got this 21-day moving average moving down there. So the resistance, the trend remains negative, remains lower to the downside. However, we really need to get a break of maybe 17.13 to open up a further attack. So overall, it's still mildly positive after the reaction from this support level, but the relief rally has been quite limited so far. And talking about the sort of obviously the gas issues that Germany have, we'll take a look at crude also. I'll try and take a look at natural gas as well. Crude oil overall we're seeing this C leg. I looked at a chart before I went away, and I was sort of highlighting this ABC correction. It's played out really nicely, almost to the T. It got down the move from the high to this interim low back to the high to this second low is almost the same, almost parity. Got 87.55 was the target, got down to 88.16, so not far away at all. Since then, we have had a mildly positive week, a bit of an indecision last week, but mildly positive this week. We've seen prices move up, and just spotted this on the daily chart, the potential for a inverse head and shoulders formation, which goes something like this. Lovely little head there, neckline. So really needs to get above this 21-day moving average, and which is around, well, just under $100 at the moment. So probably a break above 101 should see further upside, further corrective upside in crude oil, WTI crude oil, and you'll have the same sort of formation in Brent crude oil, and the level in there is 103.25, but it'd be better to get above 104, the figure there. Natural gas, have a quick look at that, and we can see how this is accelerated over the past few weeks, well, the past month really. We've got the weekly chart showing the bottom formed at 534, and since then this progressive move higher, looking pretty ominous really. There's a few, that's like a last week's candle was like a Marabouzo candle, which is very very strong indeed. So let's get the daily chart up. Let's get a little bit more idea of the short-term levels. I mean, this move higher is sort of like quite aggressive, so I'd expect some sort of correction lower. 965 is the resistance level above, not far away from there, only $1 away from that. And support, I would say support comes in around about the $7 mark, and obviously well above the 21-day moving average. So the trend, short-term trend higher, is quite solid and in place at the moment. That's about it from the commodities.
Lovely, thank you very much, Steve. So let's take a look at FX then. So starting off with the dollar index, as we often do, still trading in this bullish channel for the time being. We've started to see prices level off a little bit over the last 3 sessions, a succession there of doji candles. So a little bit of indecision, maybe a stalling in the selling pressure. That's coming up just shy of this important support at 105.78, which we've highlighted on the chart. If that level is to give way and simultaneously break this bullish channel, then we are expecting a deeper correction in the price of the dollar index. But overall, there's no denying the trend remains very bullish. So it may just be a little bit of a pullback into this support zone to basically re-engage some new longs. So overall, still looking pretty good for now, providing it stays above that 105.78. So if we take a look at euro US dollar, we can see a lot of indecision starting to form here as well. Over the last couple of sessions, it's been very choppy and indecisive, not really moving anywhere. Gains seemingly being capped at the high of this level here, which is at 102.78. So looks as though it's maybe starting to roll over to the downside again, in line with the dominant downtrend. Obviously, we've got a big resistance level here to focus on at 103.48, and unless prices can get above that, then the chances are we will see lower prices resume on Euro USD. If we take a look at cable, again, it's tried to break out of this bullish ending wedge formation, but it's really not been convincing at all. We've got some horizontal resistance to try and take out at 120.56. We still yet to see a close above that level, despite having a couple of looks above. Again, bit of indecision. Sort of sideways price action over the last few sessions, and not really giving us any indication that it's ready to break to the upside. So Maybe that need to get rid of that, and we're actually going to see prices start to roll over again to the downside. Either way, expecting there to be a fair amount of choppiness in that market for now. Just coming back to that idea of the US dollar potentially forming some support and maybe ready to reassert itself. This is Aussie versus the US dollar. We've got a downtrend resistance line here, which began back in April. We've seen a touch point there again in June. Are we getting another one here in July? We've had a little look above this level today, but we're back below it, potentially setting up further declines there in Aussie versus the US dollar. So have we seen the end of the Aussie strength in the short term? Potentially we have. If we look at Aussie CAD, it's a similar situation, rallied into downtrend resistance. Price is stalling into that level as well. So we'll have to wait and see what happens next. This is quite interesting, just indicating that there's a lot of weakness going on in euro as well. Despite the strength recently that we've seen in the Aussie, the euro has continued to move lower and broken down through key support at 147.58 and looks to be heading lower. Take a look at euro sterling. That's quite interesting as well. It's broken out of this corrective channel. We've seen then a retest higher, potentially into these sort of zones here, and failing and rolling over again to the downside. So it looks as though choppy price action and sideways price action is set to persist in euro versus sterling. Euro yen still one I really quite like. Following the break of this trend, we've seen a nice retest of the underside of the broken trend line, and prices look to be rolling over. So that is one that's on my shortlist for the time being. Let's just take a quick look at some of the other dollar currencies. So this is dollar CAD. Looks as though it's trading in a range. We saw a false breakout last week or 2 weeks ago. Is that now? It was on the 14th of July. Fast approaching this support here actually at 128.19. If that gives way, then we could see a trip back to the lower end of this channel, this range that's in place at the moment. If we look at dollar Swiss, very choppy here as well. Quite difficult to get a clear direction on that at the moment. And if we look at dollar yen, we can see there's been a break of this short-term uptrend line. Overall, it still remains pretty bullish overall, and plenty of room for a correction down to this kind of zone 131.25. But yeah, maybe in for some choppy price action on that in the short term as well. Moving on to indices, look quickly at Aussie, the ASX 200. That's rallying potentially into a band of resistance here around 6,900. Looks to be pretty strong and robust for the time being, but it'll be interesting to see how it reacts at these previous lows. If we take a look at DAX, price is stalling here. Looks as though we were going to get a decent move to the upside following the breakout of this short-term double bottom pattern, but prices really have stalled. If you look at the price action over the last 4 sessions, really not going anywhere at all. A lot of indecision candles being posted there. So we have to wait and see if this 13,025 level is going to do a job of support and maybe set the path for higher prices. But at the minute, it looks pretty choppy and pretty messy. Nasdaq. So we broke out of this triangle pattern. We're now seeing a retest of the breakout level at 12,225. Be interesting to see if we get some buying interest take shape here. We've got a lot of companies reporting again today in the US, so it could be driven by the individual constituents. So we'll have to keep an eye on that. We'll go through that after Jamie's gone through some stocks. S&P 500, similar situation, broken out of this triangle. Price is holding above the breakout level at 3946. Overall, I've still got this big dark cloud in the form of a head and shoulders top, which I think is going to cap upside. But it's pretty choppy at the minute, it would seem. And yeah, I mean, we're not really seeing any sort of huge impulsive moves to the upside to indicate that a bottom is in place at the moment. So Jamie, over to you. You can take us through some stocks.
Thank you, Joe. Yeah, we'll start off as usual with our biggest gainer and loser of the day. Biggest loser I found for yesterday's trading was this ENVB, Enveric Biosciences, which was down 28.36%. This comes after a reverse stock split on the 15th of July, a 1 to 50 stock split. If we have a quick look at why this happened, ENVB said it reached agreements to sell its common shares and unregistered preferred investment options to institutional investors for expected gross proceeds of 8 million. Shares dropped 30% after intraday trading volume advanced to more than 325,000 compared to the average daily volume of 78,000. Almost nailed that. Ended up messing it up. VRAX, this IPO'd the other day actually. What would it have been? The 21st. But this was up 62.48% yesterday. You can see we've only got 3 days of trading. But interestingly, I drilled this down to an hourly chart, and what I thought was quite cool is after hours trading yesterday, prices pretty much touched to the penny the initial highs of the IPO before setting off quite aggressively. So yeah, I just thought that was quite interesting. One to keep an eye on there. We were going to dive into our... Where is it? I haven't got up the heat map today, so I'm going to have to quickly bring that up. Here we go. Products, heat map, stock. There we are. Right, so yeah, yesterday's trading, as you showed, Joe, not a lot of movement yesterday. I think you're right. The market's kind of waiting for some of these earnings reports to come through. It seems like we had a few narrow days on the indices with not a lot of range going on. So, and it shows here, you can see there was a little bit down on some of the big names, but overall, not really moving much at all. I think today we've got Microsoft and Alphabet after close, if I'm not mistaken. Maybe we can have a look in a moment, but I feel when some of these come through, especially if we get some surprises either way, that's going to be what really drives the markets for the next few weeks or so at least. We will look at a couple of the individual names. Coinbase we've always taken a look at. Let's get back to a daily chart. Gap down a little bit yesterday. Nothing too much to look at here. The volume's still quite low. Looking for a retest of this previous resistance level at 63.41. If we do get a hold of that, could be heading back towards the ACE 235. So not too much new to report here, but we'll keep a close eye on it. Alphabet, as we said, looks like after hours today we will get the earnings report, and we've been trading within this bearish channel for a while now, with both kind of sides holding up quite nicely. This 105 kind of 70 level and the 119 to 120 level both holding up pretty well. Might get some direction after the earnings today. You know, if it comes in under the estimates, we might get a break of this to the downside, and we might see what we've seen recently, this topping pattern here, continue. If we did get a break, where to next? Well, we have obviously had a really nice run on Alphabet. If we bring up a Fibonacci from the COVID lows, got through the 38.2 Fibonacci retracement already. To me, I think we'll be getting a retest of this 50%, which we almost hit back in May. I don't think it's not a million miles away anyway, but I think that would probably be the next area where buyers do come in. Meta I had a little look at this morning, and obviously I'd been away for quite a few days now. Initially we had this channel drawn out. We got the break of the symmetrical triangle. We can get rid of that support now. We had this quite narrow range of trading days. We got the break to the upside, but it's fallen right back into this range now on a pretty severe gap down between, what would that have been, Thursday to Friday sessions. And it looks like, again, earnings coming up on Wednesday for this one. So with how the price action's been looking for a while, with this huge gap down we had back in February, it's looking pretty negative. So when you do see this negative price action prior to an earnings, certainly be careful trading around that time. I think if we do get a bad earnings report, the next kind of levels on the downside would be the COVID lows for me at kind of 137, 138. It would need a lot to kind of get us on the upside. Look at this weekly candle here we had last week. Really highlights the false breakout we had. Looked like price was doing really, really nicely, but then came right back into this range. So that's pretty negative looking candle there. Let's jump into a couple more. Peloton, why have I highlighted this? Yeah, we've got this pretty nice level here playing out quite nicely, 1125. This was a previous low from back in May. That was off the earnings report. Has since acted as resistance here on the 27th of June and again on 21st of July. So, I mean, this you could see potentially it's the start of an inverse head and shoulders that we're seeing. If we get rally back up to this 1125, that could be potentially quite a nice, at least short-term bottoming pattern. But for me, the bias is still selling into rallies until we get something like that play out and we get a break of these lower highs which we've seen. But certainly this is the most, I guess, positive looking pattern we've seen on Peloton for quite a while. So maybe some hope there that we do start getting a move higher. Riot look quite similar to me. Again, you know, we've had this potentially a bottoming pattern, inverse head and shoulders if we do get a bit more of a rally. But you don't want to preempt these things, so one to keep an eye on. The volume is really starting to pick up now on the upside, which to me is a good thing. It suggests that maybe institutions are starting to get back into this. Obviously, the price has been pretty depressed for quite a while now, but it can always go lower, so just be mindful of that. We'll look at two more. Tilray, again, we had a bit of a false breakout on this. The volume's been picking up, but we broke above this 372 level and price dipped straight back in to the range we've been seeing. Earnings coming up on the 3rd of August according to TradingView, so let's see what happens there. And we'll finish on Twitter. Wanted to highlight this 40.52 level here, which is held up really, really well as resistance. And I think if we do start getting a close above this level, perhaps we get a bit of a gap fill from this gap we saw on the 12th of May. But I'm kind of, you know, I don't love generally how this looks, but there's some signs that perhaps this is going to go a bit higher. We've got this support that's been holding up here. We've got the longer term trend line, which on a weekly chart you can see a bit clearer. It held up really, really nicely there. So potentially we're in for a bit of a break higher. Has earnings come through? It looks like earnings came through on the 22nd, and price didn't mind it, although it did seem to miss. Let's have a look. It missed just a little bit. You can see on the bottom right here. But you know, the price hasn't reacted too badly, so perhaps Twitter is starting to rally a bit. But let's wait and see. I'd be waiting for a confirmation break of this 40.52 level before I get too excited about that. But we will leave it there today.
Thank you, Jamie. It's no wonder we're struggling a bit with the markets. Yesterday was the lowest volume day in the US equities year to date in both dollar notional value and also the amount of shares traded. So really light out there. Obviously, summer holidays starting to kick in now, which means, you know, these markets are pretty well, not illiquid, but you know, they're pretty light in terms of volume at the minute, and that's likely to, well, cause markets to be range bound, I guess, for the time being, or lack any sort of impetus in either direction.
Yeah, I'm sure you get with the earnings, you'll get a little bit of action, but that, you know, it'll be very limited, I think. I think I kicked off the holiday season, didn't I, by going away, and now everyone's jumping on the bandwagon. What's going on?
Seems to be the way. Yeah. Well, I tell you what, let's do the gun to the head first, and then we can jump into the day ahead stuff with the economic and corporate announcements. So yesterday, just quickly, the gun to the head trade, if anybody's new here. Each of us pick a trade idea live on the video. Each of the ideas must have a stop and a target. It's just a bit of fun. We're just, you know, making out that we've got, if we had a gun to our head, what would we pick now to trade? All these ideas are placed at market. The trade ideas will expire at 9 p.m. on 9 p.m. UK time, or when the stop or the targets are hit. And we publish all these trade ideas on TradingView. So if anybody wants to check them out, feel free to do so. It's signal_center. Steve, you came back firing yesterday. First trade back after your break. You went long of cable and you hit target on cable. So congratulations to you.
Yeah, it all seems a bit straightforward, really. When you have
it's just too
3
easy,
weeks off, you know, you just throw a bit of mud at the wall and it sticks. Funny.
Yeah, just like you were just seeing things, like, you know, just all of a sudden everything made sense.
Matrix,
and that was
it's
what you had to
Matrix
do.
type thing.
Yeah. I went long of sterling Swiss based on the support level here and a breakout of a triangle, and that worked out quite nicely as well. I was 1.83R on side, so not quite as good as Steve, but I'll take that. And Jamie, you were quite unlucky with Bitcoin. That did start to move in the direction that you predicted, but actually I think closed minor lower, 0.09R offside, I believe, at 9 p.m. So it has gone on to hit the stop, but you know, you were stopped out at 9 o'clock as per the rules of the game. So a decent day for us yesterday. Well done, gents.
How are we doing overall on that, or have you got it up?
Yeah, let's have a quick look. So this is our spreadsheet that we've been maintaining for a very long time now, and this is the overall performance. Let me just zoom that in. So we base this on risking 1% of trading capital per trade. So Steve and I have obviously got done a lot of trades. Jamie, not as many, but overall our win rates are pretty much around the same sort of level. On average, around 41.3. Now, obviously, every trade idea that we publish, we have a risk reward ratio in excess of 2 to 1. So we can maintain profitability at these levels because we are focusing mainly on the reward side. So this is how things would have looked if you had risked £1,000 and done all of the trade ideas that we'd ever suggested. You'd be up to a balance of 2,330 as things stand. So things were moving steadily higher. I think that's probably the Jamie effect there. Then we saw a little bit of a dip off recently while Steve was on holiday. And as soon as he comes back, we've seen a nice push to the upside. So not quite at the highs that we reached back here. So effectively, we've been in drawdown throughout this whole period. But, you know, this is just a bit of fun. We don't expect to really make fortunes from this. It is just a bit of fun and just trying to highlight some trade ideas on an intraday basis.
Lovely.
So who's going to go first?
Hmm.
I'll go.
Go on, you go.
Go on.
Oh, I did want to go. I don't like it now.
I don't like it.
I don't like it. I was going to look at going short of sterling yen. So I was looking at going long of sterling Swiss yesterday, but looks as though we're in a bit of a range potentially on this. What I liked over the last hour was that we saw a bearish looking candle. I guess my risk rewards are a little better now because it's had a bit of a bounce over the last couple of minutes. But I wanted to sell this in anticipation of a move back to these support levels down here. So it's currently at 164.60, and I wanted to have a stop loss above these highs here, which comes in at 165.20, and a target to these lows down here, which is at 161.83. So looking for 4.57R on sterling yen today. If I look at the daily, actually, there's not really much going on with this at the minute, so it's not maybe the best setup, but you never know. Let's have a look and see what happens.
Nice.
Nice one, Joe.
Who wants to go next?
Jamie, are you?
I'm ready to go.
Yeah.
If
you're ready.
Yeah. So I'm having a look at the DAX today, and I've identified we've got a bit of a range-bound market at the moment, but we have, despite a pretty negative succession on the 4-hour chart, it looks like we're getting a bit of a bottom put in place here. We've had this pretty aggressive move up throughout the back end of July. A bit of a consolidation here between the support and resistance shown in the red and green boxes. The blue line for me shows that we are getting a succession of slightly higher lows, being put in. And I'm just going to hope for a continuation of this rainbow action to the previous resistance. So I'm going to look to get long on this at current price, which is 13165. 13165. I can keep the stop loss pretty tight here because if price starts going below the recent swing lows, it nullifies the idea. So we're going to keep it just below this swing low on the 25th, also known as yesterday, which is at 13117, and our take profit will be at the top end of this range at 13337, which gives us a 3.58 risk reward ratio. So looking for a move higher on the DAX today.
So, mate, Steve, is that giving you enough time? Everyone's hanging on your every word now.
Yeah, exactly. Well, no, I don't think it has. Well, it's probably given me enough time to look at things, but I don't really like a lot of what I see at the moment, really, in terms of timing of trade. So it just feels like this could be a bit of a poor effort. But the main one I'm looking at is the crude oil. This inverse head and shoulders. I quite like this pattern. I quite like yesterday's candle. It's a bullish hammer. We've had decent follow through today, and it would have been probably more of an idea to maybe buy a break of yesterday's high, but that's gone, so we can't even claim that one. But we have on the short-term charts, we're above the 4-hour cloud and the hourly cloud. So for me, the short-term trend remains higher. and I quite like the look of this here. We've broken above the previous resistance and held above the previous resistance, which we'll turn that into, that'll become support now, and we have a little bit of a dip lower. This is an hourly chart, remember, but I think there's potential for further upside on WTI crude oil today, and we can have quite a nice stop on it. We're getting long at 97.66. We'll place the stop at 96.86, which is an 80 tick stop, and we'll try and get a 3-to-1 risk reward out of it, so targeting a move up towards the basically the $100 level. The target is $100.06, so all the sixes. 97.66, we're buying it, targeting 100.06, stop at 96.86. That's my trade idea today.
Lovely stuff. Okay, good luck. They will all be published to our TradingView account, so if anybody wants to check them out, feel free to do so. Okay, so day ahead, let's move on to that now. And first of all, we'll start with the economic calendar. So we've got US consumer confidence later today. That's at 3 o'clock UK time. And then overnight, or 2:30 a.m. UK time, Wednesday, we've got the Australian consumer prices, the Q2 number. So we'll be interesting to see how that comes in and what it will do for the Reserve Bank of Australia's policy expectations. Tomorrow we've got the Federal Reserve, so that'll be very important. And on the 28th, we've got the latest US GDP reading, so plenty to keep us interested for the rest of the week. But if we take a look now at the corporate side of things, because it is earnings season at the moment, we can have a look at today's numbers. So I've filtered down our calendar to take a look at stocks from the NASDAQ 100, the Dow 30 and the S&P 500. There are 35 stocks reporting earnings today across that universe of companies, and they're all listed here on the screen. So let's have a look through some big names on there. So 3M, ADM, Coca-Cola, we've got General Motors, we've got McDonald's, we've got Moody's. I think we said we had Microsoft as well, didn't we, in amongst this? We've got Alphabet, so let's just take a quick look at that because it's generally one of interest. As we can see here, previously earnings have generally come in above the consensus forecast, other than the previous quarter where they didn't. They were just below the earnings forecast. So what will we see today? The expected number is 25.56. That's the earnings per share. And typically after these earnings results, we see an average move higher of 1.3% one day later on Alphabet. I mean, I imagine that's skewed a lot by what we saw here, where earnings were beating, but obviously we came in a bit lower last time, so that's worth bearing in mind. What else have we got? Microsoft, let's take a quick look at that, expecting $2.29. Rich history of beating earnings expectations there, as you can see, highlighted by these green dots. We'll wait and see what happens with today's announcement. Is that after hours? After market close. And typically we see a move lower of around 0.7% in the day after earnings season. So that's worth bearing in mind too. And what else have we got? Visa, let's finish off with that. Looking for $1.72 earnings per share. Bit of a mixed history there, but more recently we've seen prices beat expectations, but typically can be quite volatile in the 24 hours after earnings come out, with average decline of 3.43%. So hopefully that was useful. We've got 44 companies tomorrow, 51 on Thursday, and then 13 on Friday. So a really busy week on the corporate front in the US. Cool. Anything else to add, gents?
No, just join Motivational Club, or JOLN. Yeah, it's join Motivational Club. Can I share your trade ideas with my community? Why not? Yeah, as long as you tell them it's us that's printing the trade ideas, you can share them.
Yeah.
The more the merrier. All we do here is to help out traders who are looking to enhance their knowledge on technical analysis, and hopefully give them a little bit of our experience So yeah, share away, my son.
Yeah. So feel free to send us an email if you want to have a chat. Just put it up in the box for you. So yeah, hopefully we'll hear from you soon. Okay, let's wrap it up there then, gents. I'm about to publish my trade idea to TradingView, and I know you two will be doing the same. So if anybody wants to check those out, feel free to do so. And we will be back tomorrow morning.
Excellent. See you then.
Bye.